mean, the Chinese produce, I don't know how many metric tons of gold each year, but they never report those numbers. They're the largest importer in the world. They are the largest producer. They fly around the world and buy doré concentrate, as we've talked about, as the largest and second of gold and second largest of silver. And they're still flying around the world buying doré concentrate from South Africa or South American refiners and miners and paying double what the West will, shipping it back to China to refine it. If gold is imported in through the People's Liberation Army, it's not reported. If it comes in doré and concentrated under 995, it's not reported. They're not reporting any of it. They have minimum 5 times what we do, I believe. Alistair McLeod has talked about that they have 38 or 40,000 metric tons. Years ago, he was saying this. 18,000 by the people, and it was 20 to 22,000 by the state. That was years ago. They have government-sponsored accumulation programs. They're all about it. And when the switch is flipped, I think it will show something that will surprise a lot of people who buy the mainstream narrative. You're right. Investing in silver is a bad idea. Not true. Silver has outperformed. I mean, look at it this way. This year alone, Mark, can you type in what is the S&P 500 up this year? So the S&P 500 is up 17.75%. All right, well, we'll look at it this way. The S&P 500, to that lovely lady's point, great picture, is up 13.83%, up $82, up 13% in the midst of the greatest tech boom in history since the internet with AI. Silver's up 80%. So it's 5 times the performance of the S&P 500 in the midst of the greatest tech boom ever.
Roughly.
The people who say that may be well read. They just read the wrong shit, and they're too focused on traditional investments. And we're at a period of time where the best laid plans need to be recalibrated, rethought. And I think the people who say that emphatically, I don't think if you pressed them, if he were on this show or she, whoever said it to her, I don't think they could debate this for more than a couple of seconds with anything substantial other than, it just doesn't pay any interest or whatever. The stablecoins by law, as part of the Genius Act, have to be backed by U.S. Treasuries. It gives synthetic demand for the bonds, lowers interest rates on the short end of the curve, but the interest generated from the holding of those treasuries is not transferable to the holder of the stablecoin. So the companies themselves are buying gold in particular and Bitcoin. I think they'll use Bitcoin to pay down the debt. I think they'll use gold to devalue the dollar. The rising price of gold devalues the dollar, and that's what they want to do. And they want to devalue it greatly, in essence, give up on the reserve status in order to sell products easier. And if Judy Shelton is right, like you said earlier, backing the treasury market with bonds, she didn't just say 50, she said 50 at first, but 5, 10, 20, 30, and 50 redeemable in gold. The 30 and the 50 would have a very small interest rate, not the rest wouldn't. And no interest rate, just redeemable in gold. And if they did that, you have no upfront borrowing costs. So you bring back your manufacturing at no upfront borrowing costs, build the infrastructure, sell your product at a devalued dollar, and grow our way out of a problem that either we inflate or default upon. There's just no other way out mathematically. So I think that this is why you don't want to save in dollars, period. They all have a role to play in all of this, whether it be through stablecoin issuance, what to do with the proceeds of stablecoins. You're going to see all of the big banks and Wall Street firms issue their own stablecoins, all of them connected to an ecosystem that supports the treasury market synthetically. And if you think that there is no oversight, don't fool yourself, because the Fed will control the on-ramps and the off-ramps of said stablecoins. And they're all programmable with know your client, know your transaction, anti-money laundering technology in them. It is the first foray into a digital surveillance state, even though it's not quite a central bank digital currency. It is kind of like, the gateway drug kind of thing to it, or actually you could argue is very similar to it, only instead of issued by a central bank, it's issued by big corporations who have to flow through the central bank or through the the government channel of surveillance, and the first step with that would be the ID, the digital ID, and that's coming too. So are we there yet? No, but nonetheless, this is another reason to own assets outside the digital surveillance state. And I guarantee you that was part of the discussion, was a new monetary system with the ushering in of the Genius Act. Screwing around with all, you don't do it with physical. If you're going to be a swing trader, you do it with things like SLV or other forms of silver. Digital silver like SLV would probably be the easiest one to do it with, but you don't do it with physical. You do it with something that is trading much closer to spot, that trades at very small margins. And if you're in a brokerage account, typically your trades are free. You have taxes to deal with, but if you're going to swing trade, you don't do it with physical. The manipulation ends when the physical delivery demands outpace the ability to naked short it. And you could argue we're getting close to that moment right now. So I think they've already somewhat lost control of gold, and I think they will lose control of silver also, because no one ever stood for delivery in these assets. They are now, and these are very sophisticated players, very wealthy players that are now coordinated and motivated. And it's not just the players in the global South. You also have some very big money here in the United States that's standing for delivery too. So you can only manipulate a market over an extended period of time by pushing it in the direction that it is going. To hold back a global tsunami of demand is very dangerous. And I think some of the big money is waking up to that existential threat and doing all they can to back out of these positions. Someone will be left holding the bag. But I would say in all of the years I've done this, we've never been closer to that moment. Look at all the big money leaving the equity markets as the public is all in not only record amount in participation by John Q. Public, the mom, pa retail, also highest allocation to margin debt ever, 1.4 trillion, and highest exposure to options ever. So you have the public all in on margin and speculation, as the insiders have been selling $2 billion a week since the beginning of the year. What could go wrong? Warren Buffett sitting on $500 billion in cash. What could go wrong? At the same time, the most sophisticated money on the planet has been standing for delivery on the COMEX. Every single month since November, record this last month of October, which isn't even a delivery month for gold or silver, will probably be the third highest delivery month of the year. And every single month has been records just about. So, you're seeing very sophisticated money move into things like gold without really any fanfare, as the public is enamored with AI. And then we talk about its performance. Gold and silver have both quadrupled plus the performance of the S&P 500 this year in the midst of the greatest tech rally of all time. So ask yourself, are you wrong, lovely lady, whoever she was, or is he wrong? Is he misinformed? And that's the thing. People are opinionated and uninformed, or well-read, but reading the wrong shit. And nothing bothers me more. But I don't challenge those people unless I'm on a show like this. Out in the public, it just ain't worth it.
It's just not worth it at all. Not worth it. You can't tell them anything. They're so cocksure in their ignorance.
I think it's not as much as he sees the writing on the wall. That's part of it. He's 95 years old or whatever. He's an old man. But he sees it, and you can see it by his positioning of all cash. Dipshit companies that just want to squeeze them for profits. You can call us, send us a inventory. We'll tell you what you're looking at. It might be the right thing to do. I don't know. I haven't looked at the proof buyback costs lately, but right now, assuming they're original proofs with boxes and paper, send us a message and we will certainly check on that for you, or call us. And proof American Eagles, yeah, they're really not. They're only $50-$60 over spot. I've seen them hundreds and hundreds over spot. Not a good deal right now. I wouldn't probably do it. I'd have to see what they have.
Fred, obvious question, is crap hitting the fan?
Oh, it will.
Yeah,
it's starting to just, not all out, but yeah, it will. It will. Well, I'll give you the highest bid price in the country on them, whatever they are. But give us a call. We're pretty good at helping people with that kind of stuff.
It's gonna be
nothing goes straight up, man. Nothing goes straight up. But as I mentioned, last thing I'll say is when the market collapsed last 2-3 weeks ago, you had billions of dollars worth of metal dumped in the middle of the night in the access market, either after New York closed before Asia opened, or after Asia closed before London opened, when there's no liquidity. There's not a trader on the planet that would do that. They would be shot and fired in that order to do that. You would dump it up slowly, judiciously over hours or days in New York when there's liquidity. To dump it when there's no liquidity just means everything would hit stops and continue to fall. Then all the algorithms that run the funds and stuff would indiscriminately sell, and it would guarantee the worst settlement price. And that's not the way you do things. That's a drive-by shooting for effect. And if you keep that in mind, it's easier to understand that there was no meaning behind it. So other than to scare people and maybe to help some of the short positions cover their shorts in a very synthetic way, if you will. But yeah, and here we are right back, and we'll see more resistance. There's some big institutions that are off sides, and they're trying to get aligned with where things are going, and so there'll be volatility, but nothing's changed. In fact, the fact that it's right back up here should say that, speak volumes.